How do you prepare yourself to get a mortgage, to get a real estate loan? Actually, it doesn't take that much. Number one is having stable income. So if you have been working for more than 2 years in the same industry, preferably at the same job, but it doesn't have to be at the same job, then fine, you've got stable income. Or if you were a college student and now you've graduated and you've gotten your first job and you're ready to buy, just give us your college transcripts and we'll need the job offer letter and or the first couple of pay stubs and you can get approved. So stable income is one thing. Your credit is something else. Your credit score is actually less meaningful than what's on the credit. So if you keep your debt as low as possible and your income as high as possible, you'll have a greater chance of being approved. So that is why people will often say, buy your car after you buy your house, right? Also, the kinds of credit cards you have open, like don't go to Rent a Center or any place like that. Think about like, hey, let's get into the house first, get all the documents signed, everything is done, and then we will go and get those other types of credit. So you want to look at your credit score, but you also want to look at how much debt you have as well. The final thing that you're going to need in order to prepare yourself for getting a mortgage or a real estate loan is your cash that you're going to bring to the closing table. Whether you are working with a down payment assistance program or you're bringing your own cash, you do want to, well, most people will have to bring some money to the closing table or at least to get an appraisal done or things like that. So there are a couple of ways that you're able to get these funds. Number one is a lot of people will use their 401k. You can use your 401k money to purchase a home, a primary residence, without the tax implications. So that's number one. Number two is any kind of savings, things like that. Number three could be a gift from a family member, mom, dad, somebody like that, grandma, grandpa can give you a gift. Or number four, you might just have to start a side business or a side hustle in order to save that money. So if you have those four things kind of working in tandem, your income, your credit score, your debt that's on your credit being as low as possible, and your amount of cash that you have available to bring to the closing table for closing costs, then that's a very good foundation for you to start with. All right. Call or text us if you have any questions. Thanks so much.